Hi, I'm Carmen, and today I'm going to teach you the difference between cash and accruals accounting. There's two places where this applies to a business. The first one is how you report your financial statements and pay income tax, and the second place is GST. But firstly, let's understand the difference between the two. Accruals accounting looks at the purchase or sale transaction date. So for example, if something was purchased from a supplier on the 20th of June, if you ran your June profit and loss report on an accruals basis, which it typically is by default, you would see that purchase show up in your expenses in your profit and loss report. If, however, you were to switch that same June profit and loss report across to a cash reporting basis, then you would not see that purchase transaction show up in your expenses, because the cash report is actually looking for the payment date and not the purchase date. So if you were actually looking at your report in July, running that same profit and loss report in July on a cash basis, you would then see that purchase show up in your July profit and loss report in your expenses. So how does this apply to your business as far as financial statements, income tax and GST are concerned? Well, firstly, if you make a purchase from a supplier on the 20th of June and you haven't paid it until July or August, then when you lodge your income tax return, it is actually a deduction in that year if you are paying income tax and reporting on an accruals basis. If, however, you are reporting on a cash basis, and this is actually only the very small minority of Australian businesses, then you wouldn't actually be able to claim it as a deduction until the following financial year because it was paid in July. Now, as far as GST is concerned, if you were to run a balance sheet report for the same transaction as at the end of June, and you were looking at this on an accruals basis, which balance sheets are by default, then the amount of GST that is sitting in that GST liability account would not represent the amount of GST that you owe for that particular quarter. You would need to change your balance sheet to a cash basis, and that would give you a far better indication of the amount of GST that you are likely to owe the tax office for that particular quarter. Now, there is one small caveat, and that is that if you have not been paying all of your GST, or if you have not been entering entries into your accounting data file for the BASs you have lodged to clear out the GST from that account, then that figure will probably be very overstated. If you're not quite sure how much GST you owe and you want some help budgeting so that you know how much you need to put aside, and by running these reports on a regular basis, then ask your bookkeeper for help. Thanks so much for watching. Have a great day.